Okay, so today is 2019, January 22nd, and this is Jack. I am TNT Sunrise in TradingView. If you don't know me, yeah, you can find me here. All right, TNT Sunrise here. So today I'm going to give some of the hint for all the markets, and we also discuss certain strategies that our member has been using. And if you have any problems, today is also a very good time for you to raise your questions, and I can answer you one by one. Yes, Euro is boring. Yes, you're right. So that's why I'm talking about the sterling first. All right. So on January 2nd, right, sterling has a very strong move due to the market insufficient of liquidity, and drops to 1.237. Okay, and if you still remember that in a very long time ago, when I said it's good to short sterling, okay, that my view from the last year, this is weekly chart, right? Basically, you can find that after the sterling break this long-term uptrend channel, okay, the price just keeps moving down, right? Keeps moving down, and it's actually eventually, you can see here, it touched 0.76, the Fibonacci level, and look left, there's a supporting structure here at 1.2370, right? Yeah, for those who are using our handphones, please try to stop your videos. Okay, all right, so basically I'm talking about this weekly chart. Okay, talking about a weekly chart, you can see that basically personally I will say that sterling has actually complete a very nice test of this bottom structure. So basically means I will foresee the sterling will not have a lower low than 1.24 in this year. Okay, it's making a very beautiful bottoms, and the price has just to break the trend lines. Can you see that? Can you see that? The GBP has broken the long-term downtrend channel and also test the previous bottom, right, at 1.24, and basically this is very strong pin bar, shows that there's a huge buying forces from 1.24, and the price continue rally for 3 weeks, right? And this is actually an opening. It's just a beginning of the new uptrend. What I'm talking about, the new uptrend, is the price may easily push to 1.34 or even 1.37. So basically I will not recommend to short sterling, all right, unless the price rallies high enough. Okay, I'm talking about these two places. Okay, so I think there's a new uptrend is forming, and this is the first wave. All right, so let's see the daily chart. The daily chart sterling, you can see that the previous major resistance level is at 1.28. You can see here. Okay, 1.28. You can see a lot of force are selling, okay, from here. Okay, but on time it actually breaks this level. You can see here this places becomes buying forces. Okay, the buyers take control of this. 1, 2, 3, and 4. Can you see that? If you can see, please reply me by 1. All right. Good. So hence we can see that sterling, the GBP, okay, the bulls, and there the we call the bull and bear line. Okay, basically means if the price is above, it's bullish. The price is below this line, it is bearish. It's at 1.28. So we can make a conclusion as long as sterling is above 1.28. Okay, find buying opportunities. Okay. If GBP is below 1.28, find shorting. Okay, so this is our conclusion here. Right? And look at the price. You can see in daily chart, it's a very nice structural breakout and retest. Okay, and then to the price just making another new high today. Okay, so today you all know that from the trading view that I post a chart that I would like to take a short from here. Okay, I'm utilizing with this supply zone. Okay, however, the price didn't actually going much lower and just breaks up, so we have to stop. All right, but after this stop, I will say that the trend is still strong. Okay, so immediately we exit the trade, and now we are finding. Okay, we will finding some buying opportunities. So if we look at the 30-minute charts, you can see the breaking out point is still here. Okay, and the price not yet coming back. So do not chase. Okay, do not chase high, but wait for the price to come back to 1.30. Okay, now it's 1.3037. Okay, 1.3037. All right, so wait for the price to come back to the same structure that previously acting as a seller's zone. Now we are thinking that it's coming become a buyer zone. So you want to buy the pullback from here. Okay, so this is the first trade that it may give you the chance for today. Copy? You copy? Yeah. So what you can consider is, okay, buy the pullback when the sterling come back to 1.30. Well, your stop loss should be below 1.2968. Okay, below this low. Right. Of course, you can also when you see the price coming in this formation. Okay. Slowly down, slowly down, slowly down. Okay, and then right, you can continue to buy the price breakout point here. Understand? So if the price is coming down in this way, basically means the sellers are not very strong. Okay, and the buy is ready to take another wave of rally from 1.30. So this is a very good trading opportunities because today the GBP the sterling just break new high. You can see here, just break new high. All right, and our target will be, the first target will be about here, 1.3031. Right, because here we can see there's a turning point here. Okay, so this actually represents a supply zone. So 1.30, 1.3090 or 1.31. Okay, so if you buy from pullback at 1.30, you are actually getting a 100 pips and are risking only 35 pips. Is 1, 2, 3. Okay, and when the price comes back to here, it may have another corrections. Okay, so or maybe it will become a very bullish candle, right? So long-term wise, and also we can use the Fibonacci level for us to determine where the price might go. Okay, you can see here 1.3138. Okay, so that will be a 38.2% retracement. The second one will be at 1.36. Okay, so do not be surprised if the sterling just keeps moving up. Okay, because it has been falling down for one whole year. Okay, falling down for one whole year. It is very, very like to come back to 1.3138 or 1.3611. Melvin says there's demand zone right now below the area that you marked. Why don't we buy from there? Well, you can buy, no problems. You can buy from here if you want, right? Actually, this is a place that I mark, right? And you maybe you're talking about for this, right? But if you looks more carefully, actually, your question is easily answered because this demand zone has been tested. You can see here this is a very nice retest, right? And the second demand zone is also being tested here. Okay, so it may not come back this deep, right? And then the latest demand zone is here, which will be this rally base rally. Okay, rally base rally, and this is fresh, and it's also at the same level of the resistance. Okay, so it's up to you that which one you want to buy. Okay, but my suggestion is, right, if you go into the 4-hour chart, okay, definitely this will be a very nice structural breakout and pullback trade. Okay, your stop loss just need to be set below this pin. That's enough. Okay, you can use a combination of all these demand zones. It's not a matter. Okay, it's not a matter. Just remember to buy from here, stop at here, and looking for another chance of a buy. Okay, but because we don't buy the high, we want to buy the low. So buy the dip. Okay, buy the retracement. All right, good. So and for sterling, there's also another pair that you might be interested, which be sterling yen. Okay, the sterling yen is a crazy market because it's a drop from 140 to 130. Okay, if you remember that when I said I posted a chart to short sterling yen, okay, is here. We short from 147 or 148, can't remember. Yeah, and that is the first one. We make some pips and then stop out. But then, okay, we found a very nice re-enter at 149.25, if you remember, on November 8th. Okay, so that is the last time when I short sterling yen. Okay, so 149.25, and if you hold all the way, okay, if you hold all the way from 149 to 142, and then it just dropped to 130, right? So in the morning that January 3rd started, the market just crashed, and a lot of my traders actually took a very nice profit at this short, okay. Basically we short from here, 149 is this part. Okay, so that is the beauty that we always trying to catch from the beginning to the end. Okay, we do not want to trade in the middle. Okay, we want to trade in the extreme high place or extreme low places. Okay, and from weekly chart we can also see that sterling yen has been tested from the bottom also. Is actually this part. You can see here, this is we call a flat bottom. Okay, this is a flat bottom. Okay, so the neckline is here around 132, and you can see this nice pin, boom, tested and comes up. And in 4-hour chart, if you are lucky enough and you remember what I taught, guys, I would like to ask you guys to evaluate this this inside bars efficiency. Who want to try? You guess what is entry? Okay, by applying the inside bars rule, guys, please tell me what is the entry of this inside bar if you see something like this. Anyone? Of course, okay, just remember, okay, the first step is you mark the high and the low of the inside bar. The second step is when the price breaks up, the moment it penetrates the highest point of the inside bar or the lowest point of the inside bar, you take a buy or take a short. Okay, you take a trade. with the same directions of the breaking out. So if you trade this, it's actually a buy from 134.93, stop at 133.88. Okay, almost 100 pips. Okay, but the profit is awesome. Okay, this is the best buying opportunities. If you miss the pin here, the best buying opportunity is here. Okay, and you hold until today is 1.127.81. Right? Okay, so anyone, raise your questions. Can you understand the strategy? Inside bar, okay, inside bar form, break, you buy, take the stop loss the other side, and just close some part at 1 to 2, 1 to 4, and the rest position I just hold like this. Okay, who else doesn't know what is inside the bar? Raise your hand. Anyone? Still not clear how to trade inside the bar? Just raise your hand. Yeah, you can just give me maybe you just put the number 6 so I can know that how many of you still not master this strategy. Okay, good. So for those who are not familiar with inside bar strategy, okay, you can just go to youtube.com/Projack. Okay, and you go to the here videos. Okay, sorry, go to the playlist. It's here. Let me find it. Where is the videos? Okay, let me just find it. Inside bar. Oh yeah, it's here. Okay, so I just give you this address, right? So that you can go to study what is inside the bar and how to trade this. Okay, and let's just find another. Okay, guys. So after this inside bar, what else you have? Can you identify this? What is this? It's actually a mother bar, an inside bar, and an inside bar of an inside bar, right? Do you agree? So this we call this a double inside bar, right? Because it just tells you the price is getting lower, the high is getting lower and lower, the low is getting higher and higher, and a double inside bar breaks up, right? So this is another opportunity that you can buy. Basically, you just buy from 136.45, stop at 135.80, and then boom, bingo, you just have another win, right? And after that, we also know that the price is always trying to, rally and make some consolidations, okay, until it rallied again and pull back and then goes up, right? So this is some common scenario, okay? You cannot imagine that the price just keeps going up. It has to rest for a while. So my question is, when the price is consolidating, guys, what will be your strategy? Okay, I give you 3 options, right? The first A is I want to buy. B is I want to sell. C is I want to buy and sell. D is, okay, I want to just observe first. So what is your choice at the consolidation zone? Our inside bar can be used in any time frame. Okay, sometimes you can use even the weekly inside bar It is not the best time frame is 4 hours, but the 4 hour inside the bar will give you a high accuracy. Okay. All right. A lot of friends says D, right? Good. Yeah. It's same as your choice, same as mine, because I do not like to trade when the price is not having a momentum. So remember, okay, remember, inside bar has to be trade, okay, when there is momentum. Okay, momentum means, okay, you can see a very strong directions, okay, very explosive move of the mother bar, okay, or something like let me see, yeah, like this, okay, because the mother bar has to be strong and has to be within the trend. Okay, the best place will be you can find the inside bar that the price just break certain level, which should be here. Can you see this is a previous setter zone, and then be broken out by this mother bar and form the inside bar, and then it just form another inside bar, okay, and break up and it goes up, right? And if you trade this inside bar, it is also very nice trade, okay. Buy from 141.76, stop at a 141.44. Okay, you are just risking 30 pips, okay, in exchange of 106 pips. Yes, trend very important, and also the momentum very important. And momentum is very important. Okay, let's see gold. Some people just say that there's an inside bar breaking down. All right, okay, you can see here. Yeah. Oh, this is not inside bar because the high is a little bit higher than the previous one. Can you see that? So this is not an inside bar. 30 minutes. Let's see what we have. Yeah, I think the gold. All right, the gold do have an inside bar here. Wow, this is strong. Okay, mother bar. This is a mother bar. And the second one is inside the bar. And when it breaks down, you just take a short. Okay, stop loss at the other side. Okay, aim at least 1-1. Clearly, it hit, right? It hit. Okay. So my view in gold is still not changed, because in daily chart the gold is still consolidating at the 618 level, 1287.30, and very importantly is now we can actually confirm that this place has turned from support into resistance. Can you see that? Why I say today we can confirm that a 1287.30 is seller's control zone now. Why? Why not somewhere here? I say yes, seller control, but today. Yes, you are right, KY. First of all, it has been structural breakout. Second, today the price just nicely retested. Okay, all the way to 186.4, right? And now it's coming down, right? And if we look into the 4-hour chart, you can see here, right? This is the previous support, and when the support being broken, right, it's very likely to form a resistance, and that's the place you want to take a short. And yesterday we took a short from here. And there's another good shorting opportunities that I mentioned in my group is actually 1295 by this inside bar. Okay, this is the inside bar, and as I said, the inside bar normally give you two chance of trade. The first trade is when you short at here, the time when it break out. Okay, the second trade is when you take this one. Okay, take the pullback and short. right? Of course, and price going up here, and then we can use the ABCD patterns to predict where is the reversal zone, right? You can see here, yeah. So my views in gold has never changed. As long as the price cannot break 1298, I will take a short. I'm not saying that the gold is bullish or bearish, but I will say that I will take a short because I knew that my stop loss is just above here. Okay, the closer the price come to the pivot, okay, the greater the risk reward that I will have. You can see here, I'm risking about 330 pips, but I'm now getting about 200 pips, right? $20. So $3 for $20. That's a business. That's what you should do. Okay. Despite that, there's another trade I published in my group. Okay. Anyone still remember? My students still remember? I told you guys to short for the 2618 trade. Still remember at 1292? If you remember and you join and participate in this trade, please reply me by 1. If you remember this 2618 trade that we shot from last week, from January 18th, right? You should be happy now because this really gives a lot of profit for you, right? 1293 to 1277, okay? Instant 160 pips, boom, okay? All right, so I'd like to just keep telling you guys, when you learn the trading system, okay, it is your responsibilities and your creativity to identify all kinds of patterns and apply the knowledge that I share to you, okay, and trade with your correct actions. You cannot just say, yeah, okay, now I don't want to trade. When I trade, I must win, okay? And then you becomes like you only take a couple of trades in a few months' time, okay? And some are win and some are wrong, okay? But that's not the correct thing that you should do. The correct thing that is you have to trade every pattern that you buy. For example, now, okay, guys, what is this pattern? This is we call the XYAB patterns here. Okay, this is XYAB patterns. Okay, so if you want to buy the gold, can we? Yes, you can. You can long from 1279, stop below 1276, and aim for 1284. And some people will just be confused. How come? How come you only take profit at 1284? You only win $5. But look at the risk ratio, 2.19. It still works to try. Data said the 2618 is difficult to identify. No, 2618 is the easiest pattern that to identify. It is the most simple pattern. Okay, let me just repeat by one more time. Make sure that you understand what is 2618. First of all, you have to see a double top when the price keeps rallying. Okay, and until someday it comes back, okay, from the first top. Then the second rally cannot break new high and the price just breaks down. And it not only breaks the, it's not only that it performs a double top, but it has to be broken the neckline, okay? And then you just need to draw a Fibonacci level from the high to the low, and you wait for a price to 618 and take a short. Very simple, very easy. Your stop loss above the previous high. Your first target is always the previous low. Your second target will be the whole ABCD move from here, right? So this is what we do, okay? If you understand what I'm talking, 2618 is the easiest pattern that you can identify. It's not difficult at all. All you need to do is first find a double top. Okay, find a double top. Second, buy the 600 pullback. That's it. Simple. Okay. I don't see any difficulties. Even our primary school students can understand because it's simple pattern, simple geometry, right? Okay, good. All right, let's move on. Okay, as I said, this is the second trade I give you guys. Okay, is the gold buy trade. Okay, you can consider to buy the gold if the price cannot break 1277. Stop loss at 1276. Okay, you're risking about $3 and trying to catch a move to 1284. Master English. What do you mean? What do you mean master English? There's no languages difference between a 2618, whether I taught it in Mandarin or I taught in English, right? The pattern is just the same. Okay, the pattern is just the same. Okay, good. Let's just give you another example of 2618. Okay, it's actually Aussie dollars. Okay, all right, this will be more clear. Okay, I think you'll be very easy to identify this. This is the first top, this is second top. Okay, let me just ask you, has the price broken the neckline so far? Okay, give me 5. You think, yeah, this is a double top. The price has been broken the neckline. Easy, right? Okay, then you just need to apply the Fibonacci level here. Okay, and wait for the price to come to 0.7201. I share this trade to my group as well in last week. And enjoy the fall. See here, easy money. Easy money, right? Good. Okay, but you have to understand, you try to find a double top 2618 in the very high location when it form double top, or you're trying to find a 2618 buy when the price is really very low. You see here, keeps dropping, then you form the double bottoms here. Okay, I see these double bottoms, right? Okay, hold the 618. Okay, buy from 0.70. Sometimes it may test another low, but as long as it did not hit your stop loss, it's okay. Then you just hold, and the profit will come. Okay, I'm not saying that this is the best pattern that every time it works. No, sometimes it failed, right? Sometimes it failed, but if you do not take any new trades, can you make money? Guys, this is the reality, right? We are human beings that we only want to, we wish to have money coming to our pocket, not going out, right? Okay, we wish that only profit will come. However, there is no 100% winning strategy or trading system that this actually doesn't exist. Okay, then how do you manage to win? You have to beat the market. Okay, we beat the market by what? By luck, by technical analysis, by TA, by fundamental analysis, by FA, or by gut feeling, but or by law of large numbers. Which one do you prefer? We know that there's no 100% winning strategies. Every trading system you apply, sometimes are right, sometimes are wrong. Okay, so losses are losses cannot be eliminated, right? But we wish that only profit will come. But in a situation that the losses will also come, So the profit will come, the losses will come. How do you manage? How do you win? How do you beat the market? Give me your choice. By luck, by technical analysis, by fundamental analysis, or by gut feeling, or by law of large numbers, which means you have to apply 4 rules. Okay, I repeat again. Okay, for anyone who would like to win in the long run, okay, you have to apply 4 rules. Okay, the first rule, okay, find as many trades as you can with with uh, consistency. Second, okay, winning ratio. No need to be high. No need to be above 50. Okay, just 40 to 50 will do. 3, okay, your reward risk ratio, okay, set to be 2 to 1. 4, okay, do not risk more than 2% in a single trade. That is a 4 rules. If you can apply these 4 rules, right, I can guarantee you a success, right? You have my word, okay? It's a guarantee success because you win more money, okay? Lose less money. Okay? You win more trades, lose less trade. Right? You will not gamble, which means all in. Okay, you are safe to make the money in the long run. Right? So this is what I want to say to you guys. For my students, if you have already completed the course, you have already mastered all kinds of patterns. I have to reinforce you, strengthen this part. Every single trade, every time you have to apply these 4 rules. Okay, because these 4 rules will give you the law of large numbers. The more you trade, the more consistent you will be. And your winning trades and your losing trades will just come in a stabilized way. And make sure your reward risk ratio is set to 2 to 1. And you do not gamble, you do not all in, you don't try to want to win all the money in one shot, okay? And you are safe to make the money in your long run. Understand? Okay, take a picture, all right? Take a picture, take a photo, take a screenshot of this part. This actually is the ultimate success formula. I'm not talking about the patterns yet, you know. The patterns come the next page. The patterns are not so important than this because patterns are just how you find trades. But you have to understand what is the main reason that you can trade and make good profit in the long run. It's not by luck, it's not by TA, not by FA, not by gut feeling, but by a law of large numbers. Everyone, can you understand? If you agree, if you understand, please give me a 6. I want to see all of you understand this because otherwise you will be just an ordinary people that are looking for a 100% winning system. But actually that system doesn't exist. Okay, Warren Buffett also made losses in investment, right? If you check my records, okay, if you check my records, right, of course I'm not the one that with a very high winning ratios. Okay, maybe even half of them or more than half of them, okay, are lost. Okay, right? Some win. You see, the Canada yen makes a very nice move. Okay, from 83 to 76. Okay, some lost. Okay, some lost. But oops, this one is also a very nice trade. Okay, but do I make money by all winning trades, or do I make money because when I win, you can see here, when I win, I made a lot of profits. For example, the Canada yen, right? One trade, we win 600 pips. 600 pips. You get the fee, get the feeling. One trade, 600 pips. A losing trade, for example, today's sterling, we lose 50 pips. What is my risk reward ratio, guys? It's actually a lot, right? So with a very high risk reward ratio and with a stabilized winning ratio, okay, you just keep doing, keep fine. Okay, so what I do in TradingView is I want to demonstrate that how do you become successful by keep finding good quality of trade. Okay, all right. It's not that how good you are that, oh, this time you win 1,000 pips, 100 pips, and you all in. Next time, how? You lose, and you lose all the money. No, no way. Professional traders, we will not do this. Okay? I just demonstrated how do I consistently finding high quality of trade, and we do. Okay? That's it. That's it. Okay, good. So I hope that you learned the lessons, right? And let's talk about oil. I think some of you has been, you know, cannot wait, right? Cannot wait to trade. Ah, the oil is very nice. Okay, to trade. Why? Because just in my group, I told my students that, okay, we have to wait for the price to break the trend line. Yeah, it broken the trend line today, pulling back. And now, guys, where is the oil? Can you see that? Okay, first of all, am I using the same trading system to identify the trades? Give me one. The XYAB pattern is a special pattern that I teach you guys last year, and I also re-educated in WeChat group as well. If you need, you can look for me, right? I've already posted the picture. Then how do you identify XYAB patterns? Okay, first of all, let's concentrate in oil. Right, you can see that I'm using the same way as I always did. Okay, the price break uptrend channel. Okay, pulling back to 618. Where's the neckline? Where's the structure? Yes, here 53.43. Is there a pin bar? Is there a pin bar, guys? Do you identify a seller's price action yet? Have you, Russell? Can you see the pin bar? If you can, nod your head. Yeah, I can see your face. Yeah, so what does this tell you? This tells you that, yeah, the oil, the recent rally is just a correction. Okay, the sellers is here. The sellers is here. So you can take a trade with the sellers. So basically you short. Okay, you're short. First target 52, second target, okay, 1.1 1.618 or 1.272 extensions. Okay, 51.41, 50.63. Oh, I will think it will come to at least 50.63 here. Okay, so can you take an oil trade now? Yeah, you can. It's nothing to be feared. It's just to take the trade based on the patterns, based on what you see. You see a downfall. You see a price pulling back to 618. You see a pin bar. Then why? Why do you want to not trade? Anyone of you who are interested to take a short? Raise your hand. Yeah, it's just your choice, right? Then you have to measure that. Oh, if I risk, say for example, if I were to stop loss put at a 53.98, okay, we are risking about 80 pips, right? 80 pips. And if the price comes back to the first target, okay, so 1 to 1.5, okay, and if the price hits the second target, okay, 1, 2, 3, not bad, right? Not bad. Okay, so oil, let's short. You want to take short? Okay, all right, let's just, I will just record this one in TradingView as well, all right? Okay, price, we tested the structure in 618, and now pin bar form, right? So therefore, we could sell US oil now, right? Stop loss, okay, 50, let's put it at 54.01, okay, TP1 is at a 52, 50.65, all right? And if you want to risk only $200, I think you take less than 0.33 lots. How do you calculate the risk? Okay, now it's 53.15. We are risking about 80 pips, right? So if I trade one lot, I will lose $800. So if I trade only $200 for the risk, I can only take a 0.25 lot, right? Good. 0.25 lots for every $200 risk. I'm talking about a standard lot size. All right, hence now done. This trading plan is done here. Right? So it's up to you that you want to take a trade or not. Okay, just take your 0.25 trade. Okay, 0.25, 0.25. Okay. Right? Okay, done. Good. Clear? Are we clear? Oh, we're talking about the oil. Why are you looking at the gold again? The gold, I'm saying you can consider to buy from here and aim to 1 to 84 or 1 to 83. Okay, and then you have to see the price actions because we haven't seen the candle here yet. So you do not for sure that you break or not break, right? Just take some profit off your long, but whether you want to take a short, you have to check the price actions. Understand? Okay, because there is a possibility that the gold can form this pattern, this bad patterns. Okay, if the second test cannot break the A point, it's likely to come as this. It's possible. So the second time that you take a short from here may be stop loss counted. Okay, so I will not recommend you to take a short from here to here because the risk reward is close to 1 to 1. Okay, but if you take a buy is very good because you may catch a first wave, and also you may catch a second wave to 0.618 as well. And hence, to buy is more profitable than to short. All right, but that has come to this scenario that the price cannot break new low. Right? Good. Hey, talking about euro is it actually make a false breakout and retest it, and I said we can buy from here, and then we are stop loss hunted at this big red candle, but immediately we find the structure breakout and pullback. We take a short from the pullback, and then we win the short from here to here. Okay, and now the price is consolidating. Okay, we're not yet coming to the bottom yet. Okay, but the 618 level definitely. If you marker 618, yeah, you can see here the euro is sitting nicely at the 1.1350, 618 supporting area. Okay, so if this place can hold the price, you can see a price to rally to 1.1452 at least to here. Right, this is what I see. The euro could potentially rally to 1.1450 in the case that didn't break the 618 level, right? So take the chance that you want to buy. But right now, there's no good setups for buy because I didn't see the price break the channel yet. So it's better to wait for the breakup and use the 2618 strategy. Okay, you can use the 2618 strategies. That will give you a very, very good, nice reward and entry. Understand? Okay, so this is the number four trade that I give you today. Okay, give me your hands up, everybody. Do you like my webinar? Do you think this webinar is very good so that you can have a lot of trades, and you follow my mind to find a lot of good trades, to identify those high quality of trades and make money on your own? Right? Okay, this is wait for double bottoms to form and then buy the pullback of 618. Right? Very good. Oil. Ooh, nice. Right? Immediately after we take a short, oil, waterfall, right? Okay, who makes the money? Who makes the money, guys? Raise your hands. Man, yeah, nice. Nice, okay, very good. All right, so I think that's all for today. The latest what I'm talking about would be the crypto, would be the Bitcoin. Okay, the Bitcoin is still consolidating 618 level, and it actually formed a harmonic pattern as well. Okay, there's a harmonic patterns, all right, and the price, if the price coming like this, right, I will foresee a strong rally to 6,000. Okay, strong rally to 6,000. So just remember my words. If the Bitcoin cannot break 3,100, okay, buy it. Okay, the upside potential is huge. Just remember my word. If the price breaks 3,000, okay, cut loss. Good. When there is a false break, okay, you ask a very good question. When you will know that it's a false break? Let me tell you, when our buy is stopped, we know that it's a false break. Do you understand? Because when the price break up and retest, if it is a true breakout, the retest, after retest, the price will just keep moving up, right? It will not break a new low. And when my stop loss was hit, okay, I know that, yeah, that's not working. It is not a good, it's not a generating breakout. So I want to find a pullback to take a short. Understand? It's very easy. Okay, your stop loss is the best place to help you to determine whether this is a true breakout or not. Okay, the first idea is break up, pull back. We want to buy, right? However, it failed at here. It failed at this candle. Look carefully. This is the market will tell you, see, failed. This candle failed. We are shaken out. We are stop loss hunted, right? And then I know that, okay, it breaks new low. Bearish trend. Okay, pull back. Let's take a short. Bam. Okay, we take a short at here at the place that previously working as a support, and now it looks like becomes a resistance. Okay, and then you take a very nice profit with a short. Okay, that's it. No, you don't use 618. Why you use 618? Structure breakout, you don't need to use 618. Okay, you have to just buy the pullback with a structure, okay, and put your stop loss at the origin of the upside move. If your origin of upside move was broken, okay, stop out and find shorting opportunities. Easy. Okay, very good. Okay, nice questions. I think you are. There are a lot of people that do not know what is structured breakout trade and how to set a stop loss and how to change your trading plans when an important structure was broken. So this is a very nice example of this. Okay. Last but not least, okay, let me just conclude again. Okay, if you have any tools or any methods to buy China A shares, okay, China A shares, not Hong Kong shares, but China mainland A shares, okay, the whole year 2019 is a buy, okay, because I can tell you the China A shares has made bottom at 2005. All right, and right now it's only 2,581. Okay, if you buy now, okay, your risk is very small. All right, and your upside potential is 3,004 at least, and somehow it may give you a very strong bullish move. Okay, 3004 is the first level. The next level will be 4002 or 4006, right? So if you have any chance that you want to invest, okay, China A shares is a good investment. No, I don't think so, because Nelson, it has already tested the bottom twice. You have to know that, you see, in December 31st, a pink bar formed here and then break up. It may have a test, but not to the bottoms, maybe 618, who knows? But I will suggest buy the dip, okay? Buy the dip. No matter 2550 or 2508, right? Especially there's a gap. The gap is also filled also, okay? Just a buy. It's clearly a very nice investment, okay? You will make a lot of money, okay? Just remember, do not borrow money, do not use leverage, okay? Just buy the A shares, okay? Find a company, find a stock, just buy, okay? Find good companies like the Greek electricities, the Ping An Bank, okay? The China Merchant Bank, whatever, okay? You can find the bank shares, you can find the security shares, you can find the construction shares, You can find the high-tech shares, you can find the biotech shares, whatever, okay? Just pick any shares. It's good to invest. SPX 500. Well, uh, we took a short last week, and it just breaks our stop, right? Stop is at 2650 and breaks by this candle, and of course, when you see this thing happens, right, you are not very happy because it breaks you, hit your stop loss, and comes back, right? But to me, all right, I will not be frustrated. Okay, for me, I will say S&P, right, is a very good time to short again, just like oil. Okay, it's a drop base drop, okay, drop base drop, and this is actually the bottom of this big bullish candle. So the buyers trying to start from here, and the buyer failed. Now it becomes seller's zone. Okay, we can take a short of S&P, take a short. Okay, start as a previous high. Okay, aim for a big four to 2005. Okay, you can still do this. No more pairs. Okay, dollar yen, same thing. It's same thing. Okay, if the price cannot break this level 110, okay, it's still not a bullish trend yet. It's still just a consolidation, as you can see here. So the major resistance is 110.19. Okay, so try to find the short when the price hit this level. Okay, all right. Sterling yen, I'm bullish. I think sterling yen will go into 146.50. Right, a much more space here. Okay, the dollar yen not so strong because I think the sterling will move faster than dollar yen. So the sterling yen will be, flying. All right, good. So that's all for today. No, XYAB, there's no video. Repeat, there's no video for XYAB because that is not inside my course. Okay, it is just a special strategy that I give it for free to my students. There's no video. There's no video. Okay, but there is some strategies, reading materials, some pictures I can send to you. So there's no video. Okay, I know. Yeah. So just talk to me. Just talk to me in the group. I will share it one more time because I have already shared it last month. If you missed that, right, just ask. I will share to you. No worries. Okay. All right. Good. So that's all for today. I think we are clear with the market, and we have a couple of trade doing right now. Okay. And more importantly, remember my words. You have to apply the 4 rules. Okay, number one, find as many good trades as you can with consistency. Second of all, your winning ratio, okay, no need to be very high. 50% or 40 to 50% is okay. Number three, set your reward and risk ratio to 2 to 1. Number four, do not gamble. 2% risk per trade. And you just keep doing, keep finding trades, take trade, okay, finding your plan, trade your plan, okay, so plan your trade and trade your plan. All right, and one last good news is my course here, all right, you can see there's a Merry Christmas promotion, 20%, okay, it's still on. It's still on, all right, because it's close to Chinese New Year, so I will extend the promotion to the end of January. the end of January, right? So you can learn all my strategies, all my patterns, join my students group, receive further trading session notice or alert, okay? And trying to build your own trading system, right? Okay, good. So just drop me an email if you need a promotion because I haven't amended the price yet, right? So just drop me an email to morningasia.com, morningasia@gmail.com, okay? Just send an email to me, yeah? The title says you want a promotion of 20%, okay? And I will just reply to you. Good. So, yeah. Happy New Year. Happy New Year 219. Wish you guys a brilliant 219. Make more money in trading. Okay. Take care of your accounts. Do not gamble. Do not blow your accounts in just a few trades. Okay. Find reasons. Find the reasons to take a trade. Find patterns. Find strategies. Use inside bar using 2618 structure breakout pullback, pin bar, okay, engulfing, triangle, okay, trend continuation, trend reversal, harmonic patterns, okay, supply and demand. Use all of them just to find as many good trades as you can and trade them. Cool. Thank you, Famer. By the way, Famer, are you in Singapore now? Are you going back to China to celebrate your Chinese New Year? How do you think about it in UK go out from Europe? I don't think, Kevin. I don't think. Remember my words. I don't think. I trade. Okay? I will take the buy pull back and trade it. I don't care whether the UK go out or stay in Europe. I don't care what happens. I trade. Okay? The fundamental problems leave to the politicians, leave to the economists, okay? It's nothing that you should worry about. You are not the politicians or the economy experts, right? You are the trader. You are the one to trade your money to get a nice reward and risk ratio. You don't care where the UK go out or stay inside Euro, understand? Even I can tell you that UK 100% if you go out to Euro, you still cannot trade sterling. It's, should you buy or should you sell? Where's your stop? Where's your target? You don't know. You will find that eventually you still need to find these three things. Where's your entry? Where's your stop? Where's your target? Right? And there's nothing related with the fundamental. The price, the charts already told you. As I said just now, I said sterling will go to 1.31. Just remember my words, okay? Look closely when the price comes to here, finding a short opportunities, okay? If at a time there is a bad news for the UK, okay, good, your short just makes tons of money. Otherwise, you'll be stopped by risking this much, right? This is our strategies. Okay, you have to understand this. Okay, you take the trade because there is a good reward and risk ratio, because there's a good pattern. Okay, let the news help you. Let the news push the price up or down after you take the trade. If the news is with you, you win a lot of money. If the news is against you, never mind, you lose small money, but you are ready to take the second run. You just find another trade. Do you think this is logical? Or you want to study the whole thing, read tons of research papers, well, blah, 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 said the UK must stay in Euro, well, the other party says the UK has to go out of Euro. The Irish party may have some resistance that will pull out the debate or whatever, okay? And the Italian and the France the government will deny the agreement that the UK sent and ask for more money, right? You want to study this kind of things? Do you think you have enough time to study of this? And by the time you get a very, very clear clue, or by the time when you finally wait, the news happen, now you know that the UK, okay, did Brexit successfully. And what will happen to the price? I will tell you, the price will fly. It's either a rocket up or a waterfall. You will never catch it. Right? So why do you want to waste your time to find out these answers? Take your trade, find patterns. Okay, and let me just give you one more hint. Okay, for all the sterling traders. Okay, if you measure the Fibonacci level from here to here, you will find that the 1.618 reverse extension is also at 1.3088. And there is a beautiful ABCD patterns as well. Okay. So all this is telling you that, okay, maybe sterling it will come to a reversal. So all you need to do is you go into smaller time frames, okay, smaller time frames, and find shorting opportunities, okay. Maybe a pin bar or maybe a 2618, who knows, whatever, okay. Just find your patterns, take your trades, all right. And we are not here, okay, by the fundamental news. It's either a stop loss or a big win. That's it. Right? All my students has to understand this. We are traders. We are not analysts. You do not need to make very, very long articles to convince your customers to buy or sell. You're not the bankers. Okay? You're not the analyst. You have to generate reports. No, nothing. You just need to trade. Find your patterns and take your trigger. Pull your trigger and take a short of sterling when it comes to this one. Right? Long term, I'm talking about long term. Long term wise, I'm bullish. Right? I will say if there is any opportunity that you want to buy the sterling, right? Find those good opportunities to buy the pullback and aim for 1.34 or 1.37. That's very possible. Long term wise, okay. So it's determining on your time frame, determining on the trade that how long you want to carry your trade. Right, that's all for today. I think it's long enough. Right, so do not forget to drop me an email if you are interested to take my course in Harmonic Asia, gmail.com. Right, we will talk about the promotion one-to-one. Right, thanks everyone. Thanks for coming. See you next time. Right, I think next week I will not host the webinar because the Chinese New Year is coming, and I will take a holiday. I will take a holiday until February 10th. Okay. Okay, so from today till February 10th, okay, I will take a holiday because it's Chinese New Year, right? I have to celebrate the Chinese New Year in Singapore and China. So yeah, for my international students group, we will be contacting each other in the WhatsApp group or in the WeChat group, right? All right, so any good opportunities, I will just post the trade to you guys as usual. Okay, I will still highlight to you guys what we can do. Okay, like the trade, I will just post in the chart. Okay, see the oil, all right? Okay, the gold, sterling, right? The yen, whatever. Okay, so you will know that what I'm talking. Okay, so all my students, okay, if you haven't joined my WeChat group, please send me a message, okay, to join my WeChat group. okay, because I will consistently to provide you guys trading alerts, okay, or good trading opportunities, right? Good. Okay, see you next time. Bye bye. Bye. Cat. Oh, cat. Cat. There's nothing you need to worry about, but because dollar Canadian, okay, just follow my trading view. All right, you buy from 1.3240 and now you earn 140 pips, right? Easy, easy money. Okay, nothing need to worry about. It's just to hold your loans all the way to 1.334. That's it. Master. Right? See, I'm still talking about the same trade, right? Long from 1.32, now it's 1.3350. It still will go up. It's bullish trend, right? We catch a beginning of uptrend. Easy, okay? See you later. So yeah, that's all. Bye bye.